The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, let's check it on out now. We got the S&P is up 13, almost 14 points on the day. We also looking on over there at NASDAQ right now. It's up 4 points, and the Russell's up 6.5, with the Dow up 145 points. Another big triple-digit day. Starting to get some volume, starting to get some volatility back in the market. We got oil right now. It's down $1.25. Gold's up $9.40. And let's see, silver is up 0.29, and let's see here, we got copper up 0.0215, so some decent moves on copper right there. And then natural gas right now up 0.054. Let's go ahead and look on over at our ags. We got corn up 4 points. Down 4 points. We got soybeans down 35 points. So just a massive, massive move right there in soybeans, moving down several percent on the day. And let's check out Aussie dollar. Aussie dollar right now, we got it up 80 pips. We got the euro dollar up 46, and the pound dollar up 44 pips. So get some decent little movement there. I got dollar CAD down 33, dollar franc down 26, and dollar yen down 33, with the euro yen being up by just a mere 8 pips, and the pound yen being down by 5 pips. So a little bit of mix right there on the yen. But definitely seeing dollar weakness across the board at the moment. And that catches us up on where the market's at right now. And we'll be finding out the results later today on Tommy O'Brien's show at 4 o'clock on the Nadex Trading Competition. So make sure to tune in at 4 o'clock to hear and find out about the results on, the Nadex Trading Competition right here. And we got the leaderboard. We got some people just knocking it out of the park. And if you don't know what Nadex is about, you want to find out what it's about, hop on over here, click on Nadex on the homepage of TFNN, and get yourself a demo account right away. Just go to Trading, and then go to Demo Trading Account. You fill in a username, you fill in a first name, last name, a phone number, and your email address. Then click Apply for a demo. Once you do that, it will then email you a password, and you'll be able to log in immediately to a demo account. And what about getting a live account? Well, just go to Create Account. And it's only $100 to fund a live account. And there's no day trading restrictions. In fact, most trades on here are done either within 5 days or less. So actually all trades are 5 days or less. They have contracts that go from, basically Sunday to Friday, and they also have contracts that are, 23 hours. They have contracts that are 2 hours long, 6 hours long, 8 hours long, so lots of contracts in there. And if you're an option trader, you can think of this as options for day traders. Okay? And so you can go in, and it's like getting Friday expiration options like every couple hours throughout the week. So it's awesome. You get that huge delta, gamma maxing out the delta, very little theta because you're on your last day. And then, implied volatility Vega has a much smaller impact, being it's the, closer to expiration. The closer to expiration you get, the lower your Vega is. So, it's just a great way to trade. Now, if you're not an options trader, maybe you're a ETF trader or stock trader, but, you're having a hard time with the day trading because of the size of the account. Well, you can go over, you can trade the Nadex spreads, and they trade just like an underlying market in the sense of you buy here, you sell here, the difference is your profit. Okay, very simple. Except for they have a capped risk and reward on them, but the capped reward is very large. Even on the small ones. I mean, let's say, S&P 10 points. Nobody can complain about capturing 10 points on the S&P. Say 100 pips on, a Forex pair. Again, no one's going to complain about one trade, open to close, capturing 100 pips. Now, they have wider ones, too. They have ones that are like 250 pips wide, 350 pips wide. And so they have wider ones, but the longer it is till expiration, the wider it is. And just to show you what I mean, let's go over here. Let's go to Nadex, and I'm going to, right now, stock indices. And when I click on markets on Nadex, go to stock indices and click on contract specs. And right under that, what I'm going to see is that we have, binaries. I can scroll down here and see the spreads. And check this out, okay? So there's 2 hours till expiration. And right here on the Wall Street 30, it's 100 ticks wide. Okay? So that means it starts at 8, goes to 10, starts at 9, goes to 11, starts at 10, goes to 12, et cetera, down the list. And shows you the expiration time, shows you how long it runs, and how wide the spread is. So this one right here is just 300 points wide. It's 8.25 hours. All right? And then you have your daily spreads, which are 400 points wide. So notice how the longer it is till expiration, the wider the spread is. S&P, 10 points wide on a 2-hour, 30 points wide on an 8.25 hour, 40 points wide on basically a 23-hour contract, a daily contract that starts at 6 o'clock at night. And then there's also the master spread, and that's very rarely traded. It's basically just this really wide spread that is like, if it's 80 points wide, it'll be 40 points above the market, 40 points below the market. Like I said, very rarely will someone trade the master spread unless there was just a major crash and you wanted to buy in at the bottom or hedge at the bottom. That would be, a choice, flash crash day type trade. But really we use the master spreads, and that's just a super wide one. You'll use either the dailies or the 8 hours or the 2 hours. And you'll notice that there's a lot of little intricacies to these, but they're really simple things. They're just things that you have to learn to be a step ahead. So if we go over here, and we can look at the Nadex spread scanner. So if you haven't tried that out yet, just scroll down here and you'll see the diagnostic spread analyzer right there. Click on that, get free access to it, try it out, and then log in. And let me log in real quick. I'll log into my account. And once you log into it, then you can see a lot of these little things that add up that do make a big difference when you're trading them. And basically what it does all the math for you. So if we go up here, and let me see here, pull this up for you, and we'll go into just a couple of these little details that, to me, I made this first for myself. I got into this, and I actually found out about Nadex a couple years ago at one of their trade shows, or a money show, like a big money show trading expo. And I was speaking at the event, and they were there, and our booths were pretty close together. And it was sort of funny. My daughter, who's 6 at the time, I've been teaching her how to trade since she was 2, and actually have videos of her trading futures contracts. And so she's actually walking around with my wife, and she walks up to the Nadex stand. She can't even see over the counter. Okay, she literally has to grab the counter and pull her head up, and I think I want to say it was Marissa or Chip was there, and they're like, "Hey, how's it going?" And she's like, "Good." And they're like, "Do you trade?" And she's like, "Yeah." And they're sort of shocked when she said that, and they're like, "What do you trade?" And she's like, "I trade the SPOOs." And they're like, "Really?" And for those of you who don't know, SPOOs is the floor trader name for the S&P 500 full-size future contract. And she's like, "I trade the SPOOs." And they're like, "So is your dad here?" And she's like, "Yeah, he's right over there." And they're like, "Well, why do you trade?" And they ask her, "Why in the world would you trade?" And she's like, "To compound my money." And so that sort of started off that's how I actually learned about Nadex, because they came and found me, and then I went over there, and then I started just drilling them with questions. I didn't know about them, but I just started asking tons and tons and tons of questions. And, are you regulated? Where's my money? Is my money safe? What's this about? How does this work? How does the contract work? What's the margin? What's the commission? What's the, leverage? Just everything you ask as an experienced trader when you find out about a new potential product. And, probably about an hour or two, just drilling away. And then after I got all my questions answered, then I started asking more questions so I could start understanding the product. And then I went home and I spent time, researching it, and I just fell in love with it. I was like, wow, this is, the greatest thing ever. Because, I've traded forwards, futures, swaps, CFDs, stocks, ETFs, options, everything out there. And I'm like, wow, I can get massive leverage. I can have defined risk, so I never have to fear flash crashes or market halts or closes or terrorist events. I know what my worst case scenario is at all time. I have defined risk at all times. I can trade like I'm trading the market, or I can trade in both directions at the same time. And I was primarily a future and options trader. Even Forex, I trade Forex futures, just because I like the regulated aspect of the exchange. It's CME. And so I was like, wow, I can go in here and I can even trade Forex on an exchange, but with even better leverage. And sometimes you're talking 500 to 1, 1,000 to 1, better than what we were getting even before the NFA went in and changed out all the leverage requirements for the U.S. Forex brokers. So obviously I was all into it. And I actually didn't even trade the binaries personally for about 6 months. I was like, yeah, whatever the binaries, I'm about the spreads, because it just lined up. It was very natural for me to hop in and go, okay, I want to trade the S&P, and I want to buy or I want to sell, and just like I would do any other market. And I had to spend some time and get into it, and the more time I spent, the more I liked it. There wasn't really a lot of education out there. There wasn't a lot of tools out there. And I'm like, I really like this product, but I have one problem with the product. And the problem for me was, when I'm trading. I'm looking at my chart. I pick a buy or sell. I go with it. I do my trade. I execute it. And especially if I'm trading multiple markets, I don't have time to sort through all these different, contracts. So I'd go over here like indices, bull spreads. I go to the S&P. And then all of a sudden you got these 2 o'clock expirations, 3 o'clock expirations, 8 to 4:15 expirations. You got this, another group of 4:15 expirations. And I'm supposed to go through after I found my buy or sell and then find the contract. Even before, I can't do it because everything's moving. And I built this big elaborate spreadsheet. And with the spreadsheet, I put all the stuff in there that you had to know, and I put all the formulas in the spreadsheet. And then I figured out some little tricks on how to narrow it down. I'm like, okay, well, I want at least 3 hours, so I can just automatically go to the 4 or 4:15s. And I want to buy, so I don't need to worry about the sell side calculation. And I want it to be at least, this close or whatever, so I can do some quick math in my head and then type in a few of them. But still, you're talking an easy, 2 to 5 minutes to make sure I had the best spread. Now, I could eyeball it and get a decent spread, but I didn't know if I had the best spread. And that spread, that every time you do that can cost you money. That adds up. Let's just say, you've got a spread that was $5 more that you didn't need to. Well, you do 10 contracts at a time, that's $50. You do 20 trades, it starts adding up. So, 50 turns into 500, turns into 1,000 over 20 trades, $1,000 you gave up that you didn't need to, that could have been in your pocket. So, I was just like, well, I got to figure out a way to do this faster. And that's when I was like, I got to get this thing programmed, make it automated. And so, and I happened to run across another trader who was into it, and he's like, hey, I'll help you get this done. And we started working together, and he helped me build the tool. And I already had it made. He just made it automated, so we didn't have to worry about it. So now I can go in here, and instead of having to go through this and filter through, all these different contracts over here, I can just go right here to the scanner. I can choose what I want to trade. Let's say the S&P. Let's say I want to mirror the market. All right. I'll choose A for at the market. Okay. It means this within 10 ticks, because there's some optionality and there's some a little bit of premium, but not that much. It's the final day of trading there, and I can go, oh yeah, I want to buy, and scroll down and see what's available, and then I go, you know what? I really want some time till expiration, so I want there to be at least an hour till expiration. And now I'm narrowing it down more and more and more. I'll keep going as we come back from the break, but just sort of how I use the scanner and how it helps me trade without losing my focus on the charts, which is where your focus should be. All right, we'll be right back after this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors.
TFNN is having an open house in the Tiger's Den for 2 weeks, and the best part is that everyone is invited and you just have to be a member at TFNN. The open house in the Tiger's Den has already begun and will last through our week-long virtual trading competition, which ends September 13th. Use this time to exchange trading ideas with other traders in the virtual chat room and to discuss trading strategy. For all the information and to take part in the Tiger's Den open house, log on to TFNN.com today. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, we're going back here to the Diagnostic Trading Hour. So I was just walking through, sort of how the scanner came to be and how I use it. And so if I go in here and I go, you know what, I want to mirror the market, I want to buy, I want to sell, whatever, then what it's going to do is I just put, hey, you know what, I want at the money spread, I want to buy, and that's going to narrow it down. Instead of having, all these different spreads, buy and sell, and all the information on there. But then I'm probably still going to want to narrow it down. I mean, like this one has a $250 risk to a $46 reward. So do I want that? No. So I'll go here, and I'll usually put 0.5. I don't like putting 1 unless I'm doing like a straddle, simply because, what if it's $126 risk and $124 reward, and the reality I'm probably going to be getting out in like $50 anyway, like 5 points or something. So I usually use 0.5 on there. And that narrows it down. Now I have, a list of narrowed down choices. I could also go, I'm not going to be using this master spread, so I don't need one that has, say, $300 of risk. So I could just get rid of that, like maximum risk, put 300 in there. And then I also said one at least 60 minutes for the trade. So as I do these things, it just narrows down what I'm looking for. And I can get it off the screen, so it doesn't even, show what I want. And, or what I don't want, I mean. And then I go over here and I go, okay, well, I got the 3 o'clock, I got the 4:15s. The benefit of the 3 o'clocks are that they are narrower. They came out at 1 o'clock, so they're going to be a little more in line with the market, so usually the risk is going to be a little less. Okay? And so I may choose that 3 o'clock spread I went to put up $50 to place the trade. Let's say I'm going for a few points on the S&P. I take it off. $30 later, 3 points. Or if I did 5 of them, that'd be, $150 to make it equal to an S&P E-mini future. So I could do that one. I also go down here and I could do, say, the 415s. And let's say you're looking at this 3 o'clock 415. It's $100 risk, and this one's $151 risk. Okay, they both expire at the same time. So I'm just going to narrow it down to the 415s now, so we can go into a little bit more on the details. Oh, that's 90 minutes, so let's make it a little more, make it 100. There we go. Okay, so I got these 2 spreads I'm looking at, and trying to figure out what's really going to, work for the trade that I want to do. And they both expire at the same time. They both have 3 ticks to break even, which is very important because it's an option, okay? So, one of the ones we had up there earlier had like 20 ticks to break even. So it's only 3 ticks to break even on the trade right there. And which means, is it really 3 ticks on Nadex? And this is really important up here. Right here, one of the things I do is I give you the tick size on Nadex versus the actual contract. So you got 0.1 and 0.25. So right there, 0.1, 0.25. And what does that mean? Well, basically 3 Nadex ticks would be 0.3. So it's basically 1 S&P E-mini tick is the break-even distance. And then people go, what does break-even distance mean? Does that mean it has to move that far before I can actually start making money? This is break-even distance as of expiration. Okay? So if the trade were to expire, okay, if it were to become 415, basically the S&P would have to move up, 3 Nadex ticks. So it would be like basically a tick, maybe 2 ticks on the S&P. You'd be break even. Okay? So it's as of expiration. You can start making money right away. This is just about how far does it have to move. Now, it'll be slower, okay? But once you pass that 3 or 4 ticks, then it basically that's when your delta of 1-to-1's kicking in. Okay? So 4-3, 3-3, I mean, it's been back and forth. I really don't get the time, the width, not that big of a deal. Now I got risk. And one of them's $104, one of them's $153. One of them can make $194, one of them can make $245. So the one with a little more risk can make a little bit more money. And one thing I want to point out is that's max risk, okay? It doesn't mean you have to take on $100 risk. If you did 5 contracts to equalize it to be $50 a point, and notice up here we do put equivalent instruments, so like 1 ES equals 5 Nadex spreads. Then that'd be like $500. It doesn't just because you put on a contract on an S&P future contract that has a margin of say $400 or $500, just to say $500 to make it easy, doesn't mean you're taking on $500 of risk. I mean, you put a stop loss in, you can get out. Even if you don't use a stop loss, you can get out of the trade. Okay, but what is the difference? Let's say you have to put up $500 in margin on the S&P, and you got to put up 5 of these to have an equal contract. Why would you do it? You got the same, basically about the same amount of money, maybe give or take $100, depending upon who your broker is for intraday trading. But what happens if there is a flash crash? What happens if the market moves 30 points? And you don't have a stop in. Or you do have a stop in, it doesn't matter. It just crashes and they halt the thing. And you're stuck. Okay? I mean, that can be a bad situation. With Nadex, the most that's going to happen is you're going to lose that $100. That $500. That's the worst thing that could happen. But it gets even better than that. We'll talk about that when we get back from this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position, for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, we'll come on back here to the Diagnostic Trading Hour. So one of the things I was pointing out when we left last time is there's like $100 risk, and some people goes over here and, and there are different ways to do these trades with really high leverage, okay? But just showing an at-the-market S&P trade that goes to the end of the day, middle of the day. If I was going to go in and buy an ES, I'd put up $400 or $500 in margin. Well, your risk on Nadex is your margin. So you're putting up basically the same amount of money right now on this contract, okay? So again, why would you do it? Well, but again, if there was a flash crash, the worst thing that happens is you lose $100. Or if you put 5 of them, $500. You can't have a stop in there that's 5 points away or 3 points away, and it just gaps and just keeps going. You have a limit in there. Good luck, right? You have a stop limit, and that thing just blasts right through you. And hope you're there to take care of it. And even then, it can be there's nobody's offering, nobody's bidding, so you're not getting any buyers. Things just drop. The market falls because there's no buyers, and things just flying down. You're just getting sellers, and you're just trying to, you bought it, so you're trying to sell out of it, and everybody's selling, but nobody's buying, so things just going down. What do you do? And it's a challenging circumstance. It's hard to deal with, and so this, at least you don't have fear of margin calls anymore. Okay? So it drops that margin call fear. Because I know this is, no matter what happens, no matter what horrible event takes place in the world, the most I'm going to lose on this contract is $100 per contract, $500 if I do 5. Okay? So my margin and my risk are now the same. Unlike on futures contracts or Forex, lots, or if you're doing option contracts, depending upon the type, if you're doing a call or put, yeah, but if you're doing, other types of trades, you may not have that advantage. It depends upon what kind of option contract you're using, or even stock on margin. Your trade is not your stop. Your stop is your stop. On this, your trade is your worst case stop. So your margin is your worst case risk. And so that's one of the advantages. And, so I go and I look at this and I'm like, well, I see, $96, $146. I can trade either one. But to do this, I'm basically by $252. Every dollar on there is a tick, okay? So, and it ticks in 0.1, as we say right up here. Tick size, 0.1. And so if it moves, an entire point, that's $10. So we're talking about a 25-point move on the S&P. It's already up like 13 or 14 points. So I really don't care about the additional $50 of potential profit if I have to put up more money. So notice how I get a reward to risk ratio over here of 2 versus 1.72. They're pretty close, but I'm getting a little better reward to risk ratio. I'm using my money a little wiser. My worst case scenario is smaller, and I really don't see us taking out a 25-point profit from here up on the S&P today. So in this case, I'd probably just go with this 300-point wide one because the additional money is not worth the additional potential that I'd have to put up because they expire at the same time and they have the same break-even distance. And all of this I'm doing, here's all I have to do is I just go, 0.5. I don't want to risk more than $300. I want to buy. I want at least basically an hour till expiration. And there we go. There are the two potential contracts. Okay, that's it. It's my two potential contracts. And versus going over here and going, okay, well, I know I don't want the shorter one, so here's the shortcut tricks, right? I don't want the 10 to 2, 1 to 3. I could look at that, or I could go, I just want the 415s. So I could go here to the 415s. I could calculate all those out. I calculate all these out. And then I go, well, I want one as close as possible to the floor, and so I can narrow that down. But then I got to open up the ticket or do the math in my head and click on that. Open another ticket up. By the way, if you don't know how to open up more than one ticket at the same time, there's two ways to do it. My account, settings, and then preferences. And under preferences, to say allow multiple ticket panels and click set preferences. Okay? And now that'll let you open more than one at a time. Another way is you can open up to 5 tickets out of the window. This is actually what the scanner uses, just to tear off ticket. And this is nice because you can take it, out of the actual window and leave it up. So I do that for managing my stops. So I'll get into a trade, and then what I'll do is I'll actually open it up and I'll have it ready with everything in. Now, what about getting in the trade? I know this is one of the challenges that I had to figure out as I was learning to trade this instrument. Is, I wanted to buy this thing, and I'm waiting until the S&P hits this price or whatever. I mean, right now I'm not really going long on the S&P. I'm just saying, let's say I was wanting to buy on the US 500, and I'd open it up, and then I'd put in the price that I wanted to buy on the S&P 500 future chart. I didn't get filled. Or sometimes new traders will do this. They'll hit the bid side to try to get filled for the buy price. That's not going to work either, not unless it goes back down. And so what I learned is to look at this break-even distance. So a break-even distance is, say, 3 ticks in this example, okay? And I'd go over here, and then I'll pull up, see if I can find one for you. We'll look at it. And let's see here. There we go. That ought to work. All right, so I go and I'll pull up, say, the S&P. And once I load it, then I'm able to see, this is 1694.5, that's 1694.6. So, I mean, you're talking literally, as it fluctuates, a few ticks right there, 2 to 3 ticks, even 1 tick at some points. So, just depending upon where it finalizes at, okay? And so I'd go, I need to do a few things. One, let's say, and again, I'm not really, this is demo, okay? I'm just trying to teach you an example here. So let's say over here that I wanted to buy when the S&P broke the high of this bar. So the high of this bar is 1695.25. Okay, so first thing is 1695.25. I'll put that in there just to show the example. Let me make this ticket a little larger, make it easier for you to see it, so you can see what I'm doing. So 1695.25, if it broke the high of that, so if it hit 1695.5, that's when I want to buy the S&P. Again, as an example. Now, I need to take into account that there's break-even distance, okay, and there's bid-ask spread and things like that. So I got like 3 ticks on break-even distance. I got 4 ticks on bid-ask spread. And also the reality is, but when it hits that, I'm going to have to hit place order. And do I want this to be a limit order and it has to go up and come back down, or do I want it to be a sort of a stop market limit type order, okay? So if I want to be more of a stop limit, then what I do is I go in and I make it like, what's the worst price I would be okay with getting filled with? You can do this like on trading platforms like Ninja and stuff like that. You can say, I want to stop limit, or I want to limit, but I'll allow to have it like 3 ticks of extra cushion. Okay? So you can sort of give yourself a limit with a little bit of room on it. And so I could do like 1390. What I do is I just add 10 ticks. 1396.5. And people go, wait a minute, you're willing to go in and risk an additional $10? I mean, that's not a big deal unless you're doing 10 contracts, 100 contracts. It adds up. I'm like, no, not necessarily. I mean, I'm saying worst case, I'm willing to do that. Just like on futures, you can say what your worst case offset is on a limit. I'm doing the same thing. I'm putting in a limit, but I'm putting in like a point above. Now, it's a stop limit, and you can't do stops on Nadex for a lot of reasons. I'm actually working on building that into the scanner right now. It's one of our big projects that we'll have out hopefully in the next 6 to 8 weeks. But right here you go in, and so when it hits, let's say when I see the S&P come up here and hit and break the high of this bar, I can have an alert there, like grab this, move an alert like right above it. If say it breaks the high of that bar, then I can hit place order. And it's only at 1395.25 or whatever, 5 when it does it, but I have it at 1396.5. So I set it a little higher than where the market is actually trading. So that way, when it hits it, then instantly I'm able to go in and get filled. It's basically turning it sort of into a market order, but with a worst case scenario, which is what a limit order is, okay? A stop limit with an offset. That's basically what that is, if you do that. And so I just hit, when it hits it, I'll hit place order. So let's just say, we bought into this. Let me show you a stop loss because I think we'll hit it because the market's heading down right now. So I'm going to hit a place order on this contract just for, learning experience, okay? So let's say we bought into this because for some reason you're insane and you think it's just going to, go up even though it's flying down and market noise is flying down and volume is pushing down, the S&P is dropping. All right, but let's just say you pick a bad trade. Okay, one thing I want you to notice is, first off, look at, I bought this contract. I put in the price to buy at 1396.5, but I want you to see something. I got filled at 1691.8, so where the market was at when I put in the contract. Limit order means at this price or better. Okay, again, at this price or better. So it's going to fill me at the best possible price at the quantity that's currently being quoted by a trader, a market maker, whoever. So I didn't get filled up at 1696.5, but I did get filled instantly. Okay? Now, let's say, you want to put a stop loss in. And I'm like, you know what? I think what happened was we just hit this. We got a big volume spike late in the afternoon. I think this is bouncing off the half deviation level, and it's gonna pop on back up. That's just your opinion. Okay? That's how you're trading. So you're like, if it drops below 1689.5, I'm done. I'm out. All right, so we go over here and we click sell. Now notice I click the bid price and then I'm going to change, and this is very important, okay? I can do this here or I can do it in the scanner. I like doing it in the scanner myself. So you can leave the same ticket open or you can use the scanner. So if I leave the same ticket open, what's really important to remember is to change that to a sell. But you're going to be buying another contract, okay? So change that to sell. If you do it in the platform, just go down to the open positions and click on the green arrow next to your open position. Okay, that'll put a ticket in the window for you. It'll put it the opposite direction and fill the quantity that you're in. You can also do tear-off ticket. Get this chart in the way all the time. Do tear-off ticket, so just use that little arrow next to your open position. And it'll tear it off, then you got to update it, you got to put in the quantity, you got to fill in the price. Or you can use a tear-off ticket from ours, which fills everything in for you. So you just go right here, you just click right there, and it'll open it up for you automatically, fills it in, and actually puts it like half a point off for you. Notice how it does a close at market when you hover over it. So it'll put it like at 1691 instead of 1691.5. So it puts it a little bit below it to help you get that almost, sort of limit market built in. And now you're watching your chart, and you're, going, hey, if it drops below this, I'm getting in. But, man, I just think we had a spike reversal. 15-minute bar spiked huge. Got a big volume spike on the 5, the 10, the 15-minute bars all at the same time. And so you're looking for a high potential reversal trade. And that's basically what you're playing right now. Now, if the market actually does drop below the price that you were looking at, so let's grab that chart. It disappeared behind the screen here. Anyways, but if it drops below or behind, then you can just get out of the trade. But what do you want to do if it drops below that price? Okay, so you're in the trade. It's going in your favor right now. Have that ticket up. Have it open. Have it ready. Okay? And then go in and say like your stop loss price is if the underlying market itself drops below the low of, say the 15-minute bar. Okay? So if I go over here, this is how I have, my chart set up right there. I got, 5-minute volume. I got 10-minute with my deviations. I got the volume on the 10-minute. I got 15 minutes for spikes. I see the 15-minute bar over here. And so I'll go in. Let me change this to a crosshair. And then I'll look at this and I'll go, okay, what's the low of this bar? 1690. So I want to get out if the S&P does happen to go back down and hit 1690. Okay? Right now, hey, we're getting this volume spike. Like, there's no way I was going to buy into that thing. And then I saw that volume spike. We buy into it. Okay, it's a good trade now. We got a low risk. We only had, $60 risk on the trade. But just in case it reverses on us, then I want to be ready. So if I'm going to get out if it hits like one tick below 1690, what would that be? That'd be 1689.75, right? And remember, Nadex only ticks in 1 decimals, dimes. So I even put 7 or 8. Okay, so probably 7. But then let's subtract 10 ticks to make this like a market order. So I'm going to make it 1688.7. All right, so that way if it like hits 1690, 89.75, I submit it. Let's say it drops another few ticks. I'm still going to get filled. Okay? So you may look at that and you may go, well, if you're going to do that, why not just, put it all the way down at the bottom like at 1685? That's one of the things I'll see people say. Well, here is the issue with doing that. The problem is, what if somebody takes out the book? Somebody actually takes 50 contracts, and then this thing is just open, and you have I'll sell at 1685. That means somebody else could come in. Like what? If I put this 1685 in, or let's put 0.1 on there, watch what happens up here. Okay, you don't even see it appear because it's not even anywhere near it. But what would happen is you'd see it actually appear over here in the buy side. And so somebody could buy from you and fill that horrible order. That'd be like the worst place to sell at. So don't ever do that, okay? So realistically, what's the worst price you're okay with getting filled at? Otherwise, you're going to get filled right away. See, boom, I'm in, I'm out, somebody took my order. And you don't want that to happen. So if we go back in, we made a little bit of money on that trade, but we closed it out by doing that sell price so low. And we submitted our order without waiting for it to hit the price. And so that's what I want you to remember is it's a stop order. So if it hits the price, it's going to fill you instantly if it's that price or better. Well, if I put in an order, we got filled. Why did we get filled? Well, because obviously selling at 1691.5, when I put in an order to sell like at 1688.5 is a lot better deal. And so it's going to fill you at the best price. So you don't submit it till you're ready for it to be filled. All right, we'll be right back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.6% profit to an incredible 48% profit in just one equity. And all 6 of those winning trades had been initiated no earlier than just the previous month. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began, and right now you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber, as this volatile gold market provides trading opportunities after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial to the Gold Report today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And just check it out right here. It's going over, understanding that it is a stop order, so you can't submit the order till you're ready. But let's say you get in there, and we'll just throw the trade on again just for the learning purposes here. And I think we made like $15 on that trade. But let's see, just random stuff we're doing. But I wanted to show you again, point out, we put in a sell for 1685.1. The market was up at 1691, so it instantly sold because it's a limit order at this price or better. So it gave us almost a 6 point, or really 6 point, better fill than what we put in. But you didn't want to get out yet. You were still in the trade. You were happy in the trade. You wanted to stay in the trade, for whatever reason. So what I wanted to highlight to you is that on that trade, when you get ready to put that stop order in, okay, so I just reopened it so I can teach you this again. But put that stop order in there. And let's say, again, you're putting it in, we'll just say, what did we submit that one out? Last time we had it set to go in at 85.1, right? So you put it at 16. Oh, we don't want to do 85.1. We do the low of the bar. So let's pull the low of that bar that hit the 10-minute deviation. So the low of this bar, or even just right under the deviation. So either one. But 1689.5. So we'll say, again, 1689.5. We want it to break that, which would really be 0.25. But remember, Nadex ticks in dimes, okay? And then we want to actually give ourselves a little room, make it sort of like a limit order with a allowable offset there. So we're going to change that to 1688.2. And then if, okay, I'm going to leave this up on my screen. I'm going to put it on a different screen, whatever, but I use a pin program to pin it to the top of my screen. If it does happen to get down to that point, okay, then you just hit place order, and it'll submit it for you right away, and you'll get filled right away because you're putting it a little bit lower than the market to make it like a limit order with an offset. Basically, you're simulating a market order, but you have a cap. Okay, this is how you get in and get out of trades with stops on Nadex for now. Now, I'm going to work on a program. We're pretty close to it, and I can't wait till it's done where you can actually go in and you can set this as part of the scanner. You'll be able to say, buy when the ES contract hits this price, or sell when the ES contract hits this price at market, and then it'll just you can add an offset, like 10 ticks off from market, that type of thing. And so I can't wait to have that for my own trading, just like I built the scanner originally for my own trading, but also to share that with y'all, and that's probably the number one request I get. So we'll be adding that in to the scanner here soon. But this is, in the meantime, this is how I manage my trades. Okay, I don't go in and just go, oh, well, max risk is 100, so I guess I'll risk $100. Okay, that doesn't make any sense. That's not wise trading there to trade like that. And so I want to make sure I do manage my risk just like I would. And this is the thing that people forget. They lose, when they first come in, they lose all of their common sense they had when they were first trading. And, they're trading on the S&P E-mini futures. And they go in and trade this, and then all of a sudden they throw everything out the window. They're like, oh, well, I can't get stopped out, so I'm just not going to ever take a stop. Well, that's fine if that's a good trade. I mean, maybe that is a great trade, but maybe it's not. And so, you can get out, okay? And, anyways, yeah, glitches on, exchanges all over the place. You got NASDAQ and all that having all sorts of crazy stuff happening. But anyway, so, remember, use your common sense and put in a take profit order. This is one of the things people often will not do. So if you're inside the Nadex platform itself, I'll show you. So again, keep that stop order up there, okay? But if you're, inside the Nadex platform, you just click it and you put the price you want to get out at. So if I want to get out at, say, 13 or 16.9, let's just say 95, I can put it right there, or I can do it in the scanner up at the top, do the same thing, and just choose 16.95 and hit submit. That's all I got to do, and now my order's in. All right, I hope you all have a great day. Good luck in trading the markets. I will see you tomorrow. Stay tuned. We have another great show coming up for you right after this.
Questions are the answer. You want a better life? Ask a better question. My driving force in life is, how can I become the intelligence behind financial freedom? It's why I take massive action. It's why I've invested over 10,000 hours and thousands of dollars to create the answer, the ultimate money machine. Hi, I'm Steve Rhodes, and on Friday, September 27th, I'll be hosting a one-day online master trader course, The Ultimate Money Machine, where I'll teach you the exact same trading strategies that I use every day when trading the markets and advising my newsletter subscribers. Learn how to precisely identify the market's next move, when to pull the trigger by letting the market commit to you before you commit to it, and how to manage your trade to maximize your results, just as we did in the month of August, when I advised my newsletter subscribers of 11 new trades, resulting in one loss and a combined profit of 129%. Our next move? It's days away. The cost of this course, $595, less than $2.50 per trading session over the next year. If you're looking for the answer, it's the Ultimate Money Machine. All the details on the front page of TFNN.com.